2. Navigating the Fed's dilemma, tariffs, inflation, and interest rate decisions. 3. 87% of Americans fear inflation, how Trump tariffs and Fed rates are impacting your wallet. 4. Trump's tariff tactics, are markets playing with fire? 2. Navigating the Fed's dilemma, tariffs, inflation, and interest rate decisions. The Federal Reserve is stuck in a tough spot, trying to figure out whether slowing economic growth or stubborn inflation poses a bigger threat to the U.S. economy. This uncertainty has left policymakers in a tricky position, especially as conflicting data and shifting trade policies complicate their decision-making. But here's where it gets controversial. Even as business leaders signal rising prices and weaker demand, the Fed remains divided on whether to cut interest rates, raising questions about how long they'll wait before acting. And this is the part most people miss. The tension isn't just about numbers, it's about how tariffs, corporate strategies, and political pressure are reshaping the entire landscape. Recent surveys of U.S. executives and global business leaders paint a mixed picture. On one hand, CFOs from major companies are planning price hikes, even if they aren't directly hit by tariffs. On the other, many expect weaker sales and revenue, creating a risky balance. Meanwhile, tariffs, especially those tied to President Trump's aggressive trade policies, are adding layers of uncertainty. For example, the Atlanta Fed's survey of CFOs revealed that companies are bracing for long-term inflationary pressures, not just short-term shocks. One economist warned that price pressures could spread beyond those directly affected by tariffs, a concern that's keeping some Fed officials cautious. But the situation isn't straightforward. While some argue tariffs might cause temporary spikes, others fear they'll embed higher costs into supply chains for years. A global survey by Dun & Bradstreet found that businesses are scrambling to restructure operations, cutting reliance on U.S. markets and facing slower growth. Yet, despite these challenges, many companies aren't acting as if the crisis is temporary. As one economist put it, they are not just waiting for tariffs to fade, they are delaying investments, cutting costs, and preparing for a prolonged struggle. This hesitation is putting the Fed in a tough spot. With unemployment at 4.1% and job growth steady, there's pressure to act. But inflation remains stubborn and businesses are already raising prices in anticipation. The Fed's own data shows a split among its 19 policymakers. Half expect rate cuts this year, while the other half wants to wait. Meanwhile, Trump's repeated calls for steep rate cuts and criticism of Fed Chair Jerome Powell have added political fuel to the fire. Here's where the debate really heats up. Is the Fed's cautious approach the right move, or are they missing the bigger picture? Some analysts argue that waiting for clearer data is prudent, while others say the economy can't afford delays. And let's not forget the role of tariffs. How much of this is a temporary hiccup, and how much is a structural shift? The J.P. Morgan study highlights the stakes. Middle market firms face billions in tariff costs, forcing them to choose between passing on expenses, absorbing losses, or cutting profits. This isn't just about numbers, it's about how these decisions ripple through the economy. So, what's next? Investors are betting on rate cuts starting in September, but the Fed's path remains unclear. The key question is whether the data will tip the scales toward action, or if the uncertainty will keep rates high for longer. And here's a thought to ponder: if inflation persists and growth slows, could we be heading toward a stagflation scenario? What's your take? Share your thoughts below, because this isn't just about the Fed's next move. It's about how all of us navigate an economy in flux. 3. 87% of Americans fear inflation, how Trump tariffs and Fed rates are impacting your wallet. Nearly 90% of Americans are deeply concerned about inflation, a persistent worry that shows no signs of fading. While a recent pause in certain tariffs offered a glimmer of hope, experts warn that the full impact of these trade policies on prices is likely yet to be felt. But here's where it gets controversial: is the current economic narrative accurately reflecting the underlying pressures, or are we seeing a delayed reaction to past decisions? Let's dive into the data and explore what's really happening. The numbers don't lie. Widespread anxiety about rising costs. According to a recent Reuters Ipsos survey of over 4,300 adults conducted in late April 2025, a staggering 87% of Americans express either some or significant concern about inflation. This isn't just a fleeting worry, it's a deeply ingrained sentiment. To put this into perspective, consider that this concern has been consistently high, with inflation ranking as Americans' top financial worry for the fourth consecutive year, as revealed by Gallup's annual April survey. The University of Michigan's inflation expectations survey even reached a 44-year high earlier this spring, signaling a widespread belief that prices will continue to rise. A divided opinion on leadership. Interestingly, public approval of how former President Trump is handling inflation is strikingly low. The same Reuters Ipsos poll indicates that only 32% of Americans approve of his approach, while a substantial 56% disapprove. This sentiment is heavily influenced by political affiliation. While a significant 71% of Republicans approve of Trump's handling of inflation, only 25% of independents and a mere 4% of Democrats share that view. This partisan divide highlights the complex and politically charged nature of the issue. A curious disconnect, data shows cooling, but warnings persist. Here's a crucial point most people miss: despite the widespread anxiety, recent inflation data has actually been relatively benign. Throughout the first half of 2025, inflation figures haven't reflected the dire predictions made by many economists who warned of significantly higher prices due to increasing import taxes that, in some cases, have increased by over 700%. The Consumer Price Index, CPI, the most commonly cited measure of inflation, cooled to a 4-year low of 2.3% in April and only slightly increased to 2.4% in May. Even the Federal Reserve's preferred measure, the Core Personal Consumption Expenditures, PCE index, dipped from 2.9% in December to 2.7% in May, remaining above the Fed's long-term target of 2% but still showing a downward trend. The tariff time bomb, what's on the horizon? Former President Trump has repeatedly touted this decline in annual price increases as evidence of no inflation, a claim that many experts find misleading. They believe the full impact of tariffs is still to come. Goldman Sachs economists, for example, predict that core PCE inflation will jump by more than half a percentage point to 3.4% by December, the highest rate since 2023. This anticipated surge is directly linked to the delayed effects of the tariffs. Interest rates and a clash with the Federal Reserve. Currently, the Federal Reserve's benchmark interest rates have remained steady at 4.25% to 4.5% throughout 2025, the level higher than it was between 2008 and 2022, encompassing the Great Recession and the post-COVID-19 inflation surge. This is a critical point. The Federal Reserve's steadfast refusal to lower rates, despite repeated pressure from Trump, has created a significant rift. The central bank, under the leadership of Jerome Powell, has prioritized managing inflation risks, warning that lowering rates prematurely could exacerbate the problem. This stance has made both the Fed and Powell primary targets of Trump's criticism during his second term. Looking ahead, what should we watch? Keep a close eye on inflation data in the coming months, particularly the core PCE index. The predicted impact of tariffs will be a key factor to monitor. Also, pay attention to any further political maneuvering regarding the Federal Reserve and its independence. A final thought. Do you believe the Federal Reserve is justified in maintaining its current interest rate policy, even in the face of political pressure? Or do you think a more aggressive approach to lowering rates is necessary to stimulate economic growth? Share your thoughts in the comments below. Let's discuss. Perhaps the current data is being misinterpreted and a different economic model should be considered. What are your perspectives? 4. Trump's tariff tactics: are markets playing with fire? Here's the shocking truth: while the economy seems to be thriving, with markets soaring and inflation under control, experts warn that President Trump's tariff tactics could be setting the stage for a hidden economic disaster. But here's where it gets controversial. Could the White House's aggressive trade policies, fueled by record high markets and low unemployment, actually be a ticking time bomb? Many believe the damage from the trade war is simply delayed, not avoided. And this is the part most people miss: the constant changes in tariff rates and deadlines make it nearly impossible to predict the long-term impact on the economy. Despite the rosy economic picture, economists like Douglas Holtz-Eakin, president of the American Action Forum, caution against complacency. The tariffs are real and the pressure they create will surface, it's just a matter of when and where, he warns. The recent announcement of double-digit tariffs on countries like Japan and South Korea has already rattled investors, though the delayed implementation until August 1 only adds to the uncertainty. Wall Street has even coined a term for Trump's pattern of backing down from extreme proposals, the taco trade, or Trump always chickens out. But here's the twist, while some argue that the economy can absorb these shocks, others fear the delayed effects of tariffs could lead to a sudden and severe downturn. The 2022 inflation crisis, the worst in decades, has left investors and consumers more sensitive to price hikes. Even Federal Reserve Chairman Jerome Powell notes that certain goods, like appliances and electronics, have already seen significant price increases due to tariffs. Yet, these hikes have been masked by drops in other areas, like gasoline prices, creating a false sense of security. Mary Lovely, a senior fellow at the Peterson Institute for International Economics, puts it bluntly, you can't just inject all this price pressure into the system and expect it to vanish. It won't. David Kelly of JP Morgan Asset Management compares the situation to a delayed reaction, like a toddler who falls but doesn't cry right away. The damage might still be there, just not immediately visible. The economy, he says, is losing momentum, and the uncertainty around tariffs is a real threat. And this is where it gets even more contentious. While some experts worry about inflation, others, like Christina Hooper of Man Group, fear that policy uncertainty could depress business investment and lead to a recession. All it takes is a modest rise in unemployment to tip the economy into slower growth, or worse, she warns. The June jobs report, though strong on the surface, revealed troubling signs, such as job growth concentrated in a few sectors and a decline in job seekers due to immigration crackdowns. So, what's the solution? Hooper urges the Trump administration to finalize trade deals quickly to provide clarity for businesses. But with the White House seemingly emboldened by economic successes, will they listen? Or are they playing with fire, risking a recession for short-term gains? Here's the question we all need to ask, is the current economic stability a sign of strength, or are we sitting on a powder keg of delayed consequences? Share your thoughts in the comments. Do you think Trump's tariff strategy is a bold move or a dangerous gamble?